So yeah, I'm on the Euro USD on the 15 minutes time frame. Before I go in details about this strategy, let me explain what I have on my screen here. On our main chart, I have the 10 moving average, 10 simple moving average. You understand? So it's just 10 moving average, simple. So then on our indicator window, which is below here, is our TDI indicator. Remember, this strategy is called the TDI hook strategy. So basically, what is the TDI hook strategy? TDI hook strategy basically is just using the TDI to catch divergence in the market. Understand? We use the TDI to spot divergence in the market. And you might be confused about divergence, but we've done videos like this in the past. Guys, you can check my previous video. I have very quality content for you guys like this. This strategy is all about using the TDI to catch divergence in the market, and I'll show you a quick example before we go practically now. So for example, this is what the divergence is. A divergence means when the price on the price chart and the price on the indicator we are using here is TDI, is giving us opposite direction, which is giving us different or opposite direction. It's giving us different opposite direction. Anytime you see such a thing, it's a divergence. There's bullish divergence, hidden divergence, bearish divergence, any type of divergence you want to call it. But basically, divergence means when the price on the chart and the price on the indicator, depends on the indicator you're using here, you're using TDI, is giving you different direction. That is just it basically. So let's take an example. You can see from here the market is going up. Market is going up, and we watch it. This high here, this high here by our right hand side is higher than this one on our left hand side. But let's go to our indicator. What do we have? We can see, let me zoom in for us to see very clearly. We can see on our TDI that the high on the left hand side is higher than the one on the right hand side. What did I call it? Divergence. When you have an opposite mean direction on the price, you understand, different interpretation of the price. Whenever you see different interpretation from the price and the indicator, is a divergence, because on a normal note it should give us same thing, not different thing. You understand? So what the divergence means, it means that the price is likely to reverse. You understand? That's what it means. That means I've got to an overbought region and it might likely reverse. So let's take it. So if you look at here, this is, let me make this one bigger so you can see. Let me change the color. Yeah, I changed the color so you can see the difference now. So we can see the difference. We can see the market and the divergence are saying opposite thing. So that's the divergence. So now the next question, ask yourself, after spotting the divergence, what next? How are we going to enter this trade? This is how we are entering the trade. Now in the introduction, I explained what we have on our chart, and I'll tell you why we added the 10 moving average. Well, the 10 moving average was added so that we can know when the price is really on a downtrend, because we have seen some cases whereas the price might give us a divergence but the price must still reverse up. Like in occasions like this was just like a pullback, you understand? So the price might go up, but if it breaks the 10 moving averages and close with a minimum of 2 candles, then we can say the price might likely reverse. And how are we going to enter this trade? We're entering this trade when we see a break into the 10 moving average and we enter through the retracement. You can enter immediately. Understand? Because you know the market doesn't always give us same thing always, but when you know what you are looking for in the market, you can always find your way to be ahead of the market. For example, this is what I'm saying. Now this is the first example. We'll see the next couple of examples will be different, and we'll see. So here it broke it here, right? So we wait for 2 candles, so we could have entered here and our stop loss will be here. But now for better entry, we could have entered here. So let me show you guys what I'm saying. So we enter our short here. We enter our short here. So after the break into so after the market breaks the 10 simple moving average, we wait for 2 candles to close below that. So 1, 2, this is the second one. So after it closes, we enter for a short. Then our stop loss will be above the simple moving average. That's the 10 simple moving average, you understand? So that's it. So we set our stop loss. Then we are really going for 1 to 2. We are risking 1 to make 2, 1:2. That's the strategy. That's the rich reward for this strategy. If you know you want to achieve a high return rate, please go for 1:2. Don't be greedy, because this game is all about the long term, not short term game. You understand? It's how long you can last in the game, not how fast you can. You get? So 1:2. TP was smashed easily. Then you could have waited for it to retrace or back here, then you could have entered, then you can still go for a 1:2. You understand? So either way, you always be in profit, because this strategy can give you up to 1:3 thereabout, but in most cases 1:2 is more conservative, and it happens often. So let me use our replay tool so that we can take practical trade. We can see how these things really work. So let's start from here. So let me zoom it for us to see. So we'll do this together. So okay, market went down. So now we are looking for divergence of the market. All right. I think I spotted some irregularities here. This is higher than this, so you can bring out your trend line, then mark it. When you mark it, so you mark it, say okay, so we can see the opposites. They're giving us opposite. The market and the indicator is giving us opposite direction. So this is a divergence, but now it's not yet complete to us, because we want to see a crossing. The market must break the same 10 simple moving average. After breaking it, we want to see 2 more candles after that. I introduced this so that we can minimize our losses. So guys, please, when you're on this channel, be rest assured that I give you quality content. I take my time to get the strategies, and I redefine them to become the best. Because in most cases, a lot of people have gotten, I don't know what will happen in this trade, but there are chances it might not come. You understand? You'll be stopped up. But if you follow these steps, I can guarantee you a minimum of 85% win rate, guys. Okay, let's go. So like I said, it never came. All right, so wait for other opportunities. We just have to be patient. We are waiting, and you need to be on high at alert, on high. So it broke it, so just have to patient. So I think I can spot something here. If you look at here, the price here, the high on the left hand side is equal with this, but the one on the left hand side is lower and the one on the right hand side is higher. So I think that's a divergence. If price will eventually obey this, if it never got higher, then that's a divergence. But if it got higher, then the price is same, it wasn't a divergence. You understand? It's not giving us opposite direction, so it's not a divergence. So let's mark this one out. Always use your trend line. Always, guys, always use your trend line. Always use your trend line. So let's see how it played out. Okay, I think it respected this the trend line, so it seems this is a divergence. Let's see if we're going to break our simple moving average and fulfill our conditions. Let's see. Okay, we broke it, so waiting for one more candle. Yeah, finally. So we can wait for a retest. For better entry, you could wait for a retest. Like I told you earlier, guys, you could wait for a retest. So let's see what's gonna happen next. Perfect. So we enter here, we enter a short. You enter a short. You could have entered here, right, if you want, but it will have been better if you can wait a little bit longer, because the longer you wait, the more accurate your trades are. Yeah, so stop loss here, then 1 and 1 to 2, 1 to 2, right? Simple. So let's see how it plays out. Okay, okay. So let's assume we lost that one. Let's see. Okay, price is moving up, okay, okay. But here this trade kind of came if I set this well, but let's assume it's a loss. Wait, let's see what's going on here. I think we have a divergence here, right? Because this is higher, this here, and one trick, guys, for you to have a maximum win rate, you need to spot the divergence outside the oversold or overbought region of the TDI. You know, the oversold is 68, overbought, right? Overbought is 68, oversold is 32. Understand? So for you to have high win rate, whenever you see the divergence occur outside those zones, know that that's a very accurate trade. Because now, what is the whole psychology behind divergence? Divergence is just spotting whenever there'll be a reversal, and reversal happens when the price of an asset has been oversold or overbought. You get what I'm saying? So I think we have an opportunity here. I want to guess so. We have, so we'll enter here for 1 2. We enter our short here. So we enter our short here, then stop loss below here, then target 1 to 2. then let's see how it plays out. Okay, all right. If you notice, you see that the simple moving average serves as a resistance, so see, drive the price down. Let's see. Okay, TP smashed finally. So let's see, the market still went down, and well, I have another trick for you guys that you guys can use. You can, if you are using 1:2, you can close, let's say 90% of your profit or 80%, then you can leave the rest running. Then you can now use the 10 moving average to monitor your trade, because now I told you earlier we added this 10 so that we can understand the trend of the market. So anytime you see the market breaking away from that, just know the trend might reverse, so you can like take profits. But whenever you see there's a pullback, when it's a pullback, the 10 simple average will always replace that. Whenever you see a break away from that, just know the trend might reverse against you. So okay, you see it reversed here. So I told you guys 1:2, very perfect. If you wanted to go for 1:3, you still win, but a bit risky, you know. That's why I said we should go for 1:2. So let's see if we can get one more opportunity. Let's see. All right. Okay, I'm waiting. We are waiting. For us to see. So let's see, do we have any opportunity? Do we have anything here? No. They are same. See this? This is higher than this. This is higher than this. So same, no opportunity yet. Okay. Doesn't come always, guys. So you just have to be patient and be accurate, you know. Wait for your setups before you enter. So do we have an opportunity here? It looks like, but guys, it's not oversold yet. It's not overbought, I mean. So no wonder it never broke the trend line, you know. So let's see. Okay. All right, let's wait. So, and guys, this strategy is very good for higher time frames. The minimum time frame you can go for is the 15 minutes. So you can go for the 30 minutes, 1 hour, 4 hours. But you know, if you're going for higher time frames, you know you're going to hold those trades for days, you understand? So okay. No opportunity yet. No opportunity yet. No opportunity. This wasn't divergent because it's the same. This is high. This high is higher than this. It's higher than this. So it's not divergence. The market and it's the TDI are in accordance to price, you know. Let's see. Let's see. Let's see. Let's see. So this is kind of, let's look. Let's look at this. Okay. Never record. So I think I can spot a divergence here. This high here is higher than this one, but our TDI is saying this high is higher than this. So I think there's a divergence, right? Yeah, they are equal here, but this is higher than this. So what we just need to see, we just need price to break the simple moving average before we can take any entry, right? So let's go on. Okay, perfect. Going for a short. Going for a short here. Immediately after the candle close. Let me see. Okay, yeah, immediately after the candle close. So stop loss, if it breaks this 10 simple moving average, it's almost good as the trade might not come. Understand, there are high probability it won't come. So keep your stop loss tight so we can maximize our profits, you know. So let's see how it plays out. See, I respected the simple moving average, and yeah, TP smashed. So TP smashed. So if you wanted to hold, I think you will make more profit if you were holding, maybe. But I advise you, if you want to do that, please close at least 80% of your profits, then you can like hold the rest, so you can use the simple average to know when to leave the market. And mind you, these are pullback, so you know when there's a pullback, it's a downward movement. So if this pullback is successful, you know the price is going to drive downward. If it's not, it's driving upward. You guys understand the wicks attached to all those stuffs. So I think, okay, to do reverse here, no, it's reverse, was a pullback, so still holding. But guys, to be on the safer side, please lock in your profits and just leave the rest and throw the stop if you wish. So that's it for me, guys. That's it for today. The TDI hook strategy. I wanted to show you guys practically how it works. You can see how it is smooth and easy. So